Welcome back to yet another information-packed Luxury Home Consultants video. I'm Bill Barrett, the broker at Luxury Home Consultants, and today I'm ready to help you know what you need to know about the current home mortgage landscape. Now, whether you're Milburn Pennybags, Scrooge McDuck, or the leprechaun from the Lucky Charms cereal, you know one thing, and that is that whoever's got the gold makes the rules. It's the golden rule. And it's no different in home mortgages. Home mortgages are very complex, and so to help us navigate these murky waters of home mortgages today, I've brought in an expert. I'm speaking about Pat Cray. She's a loan officer with Paramount Residential Mortgage Group. So welcome, Pat. Please introduce yourself. Tell us a little bit about your career in mortgage lending.
Hi, Bill, and thank you for giving me the opportunity to talk about mortgages today. I have been in the mortgage business as a loan originator for about 22 years now. Prior to that, I actually graduated from Florida International University in Miami with a degree in finance, and I've had a very, very good career in information technology where my logic skills came to be perfected.
Pat, it's great to have you here today, and I always tell people that you are the single best loan officer I've ever dealt with in my career. And so that's why I've asked you to help out today here. So let's get right to it. Now, the biggest thing going on right now is rates. Rates have changed a lot. We've had these really historically low rates for the last several years. Where do you think rates are headed for the balance of this year anyway?
Rates are really right now in the fives, and they are heading upwards due to the federal government's control of the economy with the prime rate, and also the fact that the federal government has backed down on buying mortgage-backed securities. So I'm anticipating that they're going to be hitting 6% before the end of the year. And may go a little higher than that. But in history, in 1981, rates were 17%.
This is true. And I'll tell you, when I started my career in real estate, I had a newspaper clipping that was stuck with a little thumbtack behind my desk of a newspaper article. And this is like 1990. And I believe it read something like, interest rates drop to 11.5%, real estate market surges. So everything's relative. Everything's relative. So we're seeing new challenges here. And so with rates going up, what is that going to do for us? Are we going to start seeing the return of ARMs and HELOCs, these more expensive mortgage insurance to get these programs done?
Bill, that's right. There are some changes that are coming about. Adjustable rate mortgages, oftentimes fixed for a certain number of years, and then they start adjusting.
Right.
And even 40-year amortizations are being considered. So with a 40-year amortization and an adjustable rate mortgage, you can have a much more affordable house payment.
That's great, and that just means that there are some vehicles that are in the works now to help people get into these homes without exhausting all of their cash.
Correct.
Perfect. So Pat, that gives me a really good idea of where rates are and programs to help deal with these rising rates. But let me ask you this. What is the single biggest problem that you see going on right now? What is maybe not a problem, but a challenge when you're trying to get buyers approved for loans?
Well, what's been happening is the Fannie Mae has been strengthening their desktop underwriter, and Freddie Mac has been strengthening their loan prospector. Those are two programs that are used to actually underwrite loans. Now, what they've done with these changes is they've made it harder and harder to get a conventional loan.
That makes sense. but I always know that you seem to be able to crack the algorithm.
I look for ways to come up with a different solution.
That's right. There's no problems. There's just solutions, and that's what gets you over the finish line with getting some of these deals done. Okay, Pat. So another question for you, and this is one that I get a lot. I get a lot of my high net worth buyers. They'll call me up and say, well, gee, Bill, I've got a Merrill Lynch account or I've got a Fidelity account, and I want to hypothecate against that balance and get the mortgage on my house that way because I could pay cash for it, but I want to keep that money working. That has always been a very complex process, and it always, in my experience, has had some rather frustrated buyers. Help. Is there an alternative to that? Is it really necessary to do that?
When you have a situation like that, Bill, I'd really like to have a conversation with that borrower and really talk about what their assets are and what is available to them and what products we could use to really help them get into the $2 million home.
That's great. I just, like I said, that's something that I always found as a point of much frustration. A lot of people think it's a great idea. It sounds good going in, and then it just becomes a slow motion train wreck, as you will. My question for you is, if you've got the great cash flow, if you've got the reserve, and you've got credit, which I've found a lot of high net worth buyers that don't have the greatest credit, but they certainly have got the means, what are the options?
Well, first of all, we need to evaluate their credit. A lot of people do not realize how simple it might be to get a good credit score. In some cases, it may be quick credit repair, which is done by another professional, to correct their credit and have them purchase ready in 30 days.
Wow, so you're, I think, referring to a rescore, I've heard?
There's some rapid credit rescoring, yes.
So it might involve maybe closing out 6 credit card accounts that you haven't used in the last decade. It might involve paying something off, that's got 2 or 3 payments left on a line or something.
Well, yes and no, because a lot of people think if they close old credit cards, they're doing themselves a favor and their credit score drops. They want to keep their credit as open as possible to build history. Okay,
not exactly what I would have thought, and that's why we need you, because that's good information right there. And to that end, I said this from the start. This is a very complex and often misunderstood industry, and that's why we need someone like you to help us navigate the murky waters. Okay, Pat. Biggest challenge I've seen as of late with COVID, we've got all these people moving in from Chicago, from the New England states. They're leaving behind some homes that perhaps they're not able to sell, but they want to get in on this Florida market while they can. And so it's created challenges where people are wondering, where do I get this cash from? So you've got a home where you've got a huge equity position, let's say in New York, and we've got a lot of those buyers coming from New York right now. What are the options for them to get into their Florida home if it's going to take some time, or even if they don't want to sell that home that's from their home state of New York or Connecticut or Rhode Island or Massachusetts or wherever it may be?
So for the person that has a property in New York that's not sold yet, but they want to buy a property in Florida, their best option is a bridge loan. So what the bridge loan will do, it'll use the equity from the property in New York and give them a huge down payment on their Florida home.
Okay.
And then they'll have time after they close on their Florida home to actually sell their New York home and pay off their bridge loan.
Okay, so bridge loan is the first option. In lieu of that, they just need to price to sell up north, I think.
Correct.
Okay, great. So Pat, with regards to ARMs coming back and all these second mortgage products and HELOCs, is there anything else that we're seeing out there that is coming up again? I know that we had talked about this the other day.
Yes, we are seeing the ARMs coming back, and we're seeing interest-only mortgages.
Wow.
And we're also starting to see the opening of 40-year amortization products, all to make the payment much easier to handle with a little bit higher rates.
Great. That's going to help a lot of people out.
And HELOCs are being used for debt consolidation and for home improvements instead of refinancing existing low rates.
And I think that makes a lot of sense. I think people's knee-jerk reaction, clients that called me talking about refinancing, that the knee-jerk reaction is, well, let's just refinance the whole thing, where it's probably a better economic decision to just take what you need and then put it back. You have to put it back.
Correct.
That's it. All right, Pat, well, you've really gotten to the bottom of a lot of stuff for me between rates and programs and relocating buyers and bridge loans, because that's really all that's going on right now that's big, although there's always something going on in the mortgage industry and real estate industry. So last question for you. What would you add right now? What's worthwhile for some of the people watching this video to know?
Well, what's really worthwhile is in the mortgage industry, we have many different solutions. We have solutions that use asset utilization. We have solutions that use bank statements to generate income. We have IRAs that can be used for income. So there's many different solutions available in today's marketplace.
So thank you, Pat. You've answered a lot of questions for us today. And I don't consider you to be one of the best, but the best. And I would encourage any of our viewers that are watching today, if they've got a mortgage question or they're looking to get pre-qualified, your information is going to be somewhere on the screen here. Give you a call, send an email, and I'm going to tell you you're going to be very happy working with Pat. She's the greatest. Thanks for joining us today. I'm Bill Barrett, the broker at Luxury Home Consultants, and I represent buyers exclusively in the purchase of luxury homes.